If you have been waiting to buy a house but don't have enough money or down payment, you may be able to buy a house sooner than you think. You may want to consider the newer 100% financing from the FHA Down Payment Assistance Program. Yes, you can buy a home with 0% down payment with this unique program offered by the FHA, Federal Housing Administration. If there is one major thing that stops thousands and thousands of buyers like you from buying a house, it is coming up with a down payment. So with this 0% down payment program, you are closer to buying a house than you think. Here's how it works. Let's take an example of a house that you're going to buy for $300,000 with an FHA down payment program, which requires 3.5% down. On a conventional loan, usually takes 5, 10, 20% down. But with the FHA loan, it takes 3.5% down. So on a $300,000 house, you would need $10,500, which is 3.5% down payment. But with the 0% program, they can give you an additional 3.5% loan. For an additional $10,500 loan, which is a second loan, you get your loan for the first loan amount, which is 96.5%. Then you take a loan for your $10,500 down payment portion, which is 3.5%, which is a 100% loan. So you have to come up with a 0% down payment. And just to let you know upfront, I'm Mike Patel with First Team Real Estate. I'm not a lender, but this information is just to give you information because a lot of the buyers call us and say, hey, can you help us buy a house, but we don't have a down payment? What is the solution? So I want to give this information for you to understand that these programs are available. If you want to know specifics in your area, how the program works in your county, because there are different loan limits, etc., please talk to a lender or a realtor who specializes in the FHA loan program 0% down. But I just want to give you the basic information and also to let you know that different counties, different state might have slight changes and restrictions in this program. So be forewarned, but also be educated and informed from what I'm about to tell you. So at least you know what your options are. And if you don't have any down payment, you are able to buy a house regardless. Now also keep in mind that when you buy a house, and in this case, an example of $300,000, you got your 96.5% loan as a first, and you got your 3.5% loan amount, which makes it a 100% loan, zero down payment. That does not mean that you don't need any money to buy the house. You still need some money, and that money is to pay off your closing cost. So when you buy a house, you have closing cost, which includes escrow fees, or in some cases they use attorney fees or closing attorneys. You have title insurance, you have property tax deposits, you have insurance cost up front, you may have inspections, you have appraisals, and a lot of other fees, which could add up. Typically, closing costs add up anywhere from 1% to 3% of the purchase price, typically. So in this case, if your closing cost is 2%, let's say on a $300,000 house, you have to come up with $6,000. Yes, it's 0% down, but now you have to come up $6,000. And if you do not have that $6,000, you still have two options. One option is you can ask the seller to pay for your closing cost. And generally speaking, the lenders allow up to a maximum of 6% of the closing cost. So your option one is ask the seller to pay for your closing cost, or a portion of it. Maybe they'll pay a couple of $1,000 and you come up with the extra $4,000 or whatever. So that is allowable by the lender for the seller to pay for your closing cost if the seller is willing to pay. Again, you need an expert lender or an expert realtor, and I have a link below. If you need somebody in your local area, I'll be glad to refer you. There's a link below, so please sign up and I'll refer you to an expert lender or a realtor. The second way you can dodge the closing cost is you can have gift money, maybe from your friends or your family or your relatives. Lenders do allow 100% gift money in this case. So now you're putting 0% down and you're getting a gift or a bonus from your friends and family or relatives. Let's say $6,000 in this example. So you're coming up with 0% to buy a house. That'll be great. This program is unique and there are some other features and benefits. One of the benefits is that the amount of loan given out varies by county. For example, in the county of Maricopa, Arizona, the maximum allowable FHA loan limits in that county is $530,150. If it's 2 units, then the amount increases to $678,700. But I'm in Orange County, California, so $500,000 limit may not do much for me because average home in Orange County is around $1 million. So in this case, our loan limits will be much higher. I have a link below. You can check in your county what the maximum loan limits are. So you can put in your county and the state and it'll give you the loan limits. So check out, there's a link below. The other advantage of the FHA loan and the zero down FHA loan is that you can purchase it for single family residence or a townhouse or a condominium or even up to 2 units. A regular loan, FHA loan, will allow up to 4 units, but with the 0% down program, 100% financing, they only allow a maximum of 2 units as a primary residence. So you have to live in the property to get this loan as a grant. So the other unique program about this loan is that you have to have income limit. It's just not for anybody, somebody making lots of money, somebody making lower amount of money. So they do have loan limits. And like I said, each county, each state has their loan limits. But I just wanted you to be aware that there are loan limits, there are income limits for qualification. And on top of that, there is also a flexibility on your FICO score. On a conventional loans, usually they require 620, 640 or higher to get a good rate and good amount. But with this FHA loan program, your FICO score could be as low as 600 FICO score. And this could be what we call a mid-level FICO score. So what they let you do is they take 3 FICO scores from Equifax, TransUnion, and Experian. You take those 3 and they use your mid score. So if your mid score is 600, you are still able to get this loan for as low as 600 FICO score. There are a lot of other grant programs out there that's given by the city or the state or the county. A lot of those usually run out. The unique thing about this 0% down loan program by the FHA is that they never run out of this money. They always have this money, unlike the other grant programs where they have it for a month or 2 months, or they have $5 million or $20 million, etc., and they run out. And you applied for it, and by the time you apply, they run out. In this case, they never run out of this loan program. So the grants are always there for you to use. Again, check with your lender for limits and restrictions. I also want to talk about how the first loan and the second loan works. So in the previous example of the $300,000 house, you would take a first loan in the amount of 96.5%. So that'll be your first loan on the deed and title. Then you're taking a second loan of 3.5%. So that is a second loan on your deed and title as it's recorded. Now, the 96.5% portion of the loan is amortized over 30 years. On your second loan, should you decide to sell before 10 years, or should you decide to refinance before the 10-year mark of your second loan from the day that you obtain the loan, then you have to pay back that 3.5% if it's within the first 10 years and there is no prepayment penalty. So right now, as we know, the interest rates are very high. And when you buy a house after a couple of years, if the interest rates drop, you may want to refinance. So hopefully the prices have gone up. And then when you refinance, even after you pay off the 3.5%, you have enough to refinance the first loan. But that's a caution, or that's something you need to know, because there are restrictions on the refinance or sale of your home if you do that within 10 years. And also the other thing to note is that your first loan is amortized over a 30-year period, and your second loan, the 3.5% portion, in this example, it was $10,500, that is amortized over a 10-year period. So you have 2 mortgage payments, the first and the second, amortized at different years. The other thing that you may want to be aware of, how the interest rates work on the first and the second. So let's say, as an example, you obtain a loan on the first loan amount, which is around $289,000, the 96.5%. And let's say the interest rate they're charging you is 6%, 30-year fixed. And when you get your 3.5% loan, which is on the $10,500, your interest rate is typically 2% above your first loan. So on the second loan of 3.5%, if your first was at 6%, your second loan would be at 8% interest rate, 2% over the first loan amount. Just like any other loans, the lenders will check your credit, they'll check your income, they'll check your qualifications, and they will check your debt to income ratio. What that means is they look at all your debts, your car payments, your student loans, or child support, or any other loans that is reported on your credit. That'll be accounted for, and they look at your debt ratios. Let's say on a conventional loan, if your debt to income ratio is 40% or 35%, depending on where you get your loan from and how much expenses you are paying and how much loan points you are paying, all these varies. On an FHA loan, the other unique advantage of getting an FHA loan is that you can extend your debt to income ratio. It could be a lot higher than 45% or 35%, and it can be up to 50% debt to income ratio. Of course, your cost and your fees may change, but if you really want to buy a house and you don't have the down payment and you had the car payments and you had other expenses, lenders will be flexible and look at your debt to income ratio and be flexible on it with some consequences as far as your fees and points that they charge. But it can be done for you to obtain that loan that you really wanted. I did a video a few weeks ago, and there's a link at the end of this video, or there's a link over here. It's called the latest FHA loan requirements for the first-time home buyer. Please check it out. It will educate you on your basic first-time home buyer loan programs, and you will know more about it, including what you're learning over here. If the down payment has been stopping you from buying a home, as it does to most of the buyers who have challenges on buying a home, or if you think that, hey, when will I ever get $10,000, $20,000, $30,000 collected to buy a house, worry no more. You can opt for the 100% FHA loan. We have a link below. Contact me and I will refer you to a local realtor and a local lender who are experts in the FHA loan program and the 100% FHA loan program. Thanks for watching.